Hello, everybody, and welcome back to the Dash Trader Newsroom. Does Walmart's weak forecast signal trouble ahead? And will inflation concerns make a comeback? My name is Michael DeJoy. I'm Director of Educational Services here at Dash Trader. And I'm joined by my co-host, Jill Molandrino, Global Markets Reporter from Nasdaq. Jill, how are you?
Good, doing well, Mike.
Great. Let's jump right in. Markets are still near all-time highs even after today's little sell-off. Could just be profit taking. But Walmart warned that its profit growth will slow and that it will not be immune to the looming tariffs in Mexico and Canada. Also, interestingly enough, Amazon's revenue topped Walmart's for the first time, making Amazon the world's largest retailer. What are your thoughts on the forecast? The recent forecast by Walmart. Incidentally, Target and Costco were down on the news as well in sympathy. What are your thoughts overall about the kind of dark clouds coming?
Well, there's a couple things, Mike, and we mentioned this on our last call, where when you're reporting fourth quarter earnings in the first quarter, it is not unusual for guidance to be soft or not as convicted because you're looking out farther in the year relative to when you're reporting third quarter in the fourth quarter where you have more visibility, right? And that just tends to be seasonal. So that's one thing. I think it's important that we acknowledge that. The amount of earnings beats are in line with the street. More companies are reporting beats on the top and bottom line, but cautious on guidance. Again, seasonality is part of it. However, I think it's prudent that companies are recognizing that the operating environment is challenging because what's happening with policies and tariffs, it hasn't been executed on yet. So it's hard to look that far out when you don't know what the operating environment is going to look at. I don't think it's inflammatory for Walmart to say that they're not going to be immune to tariffs in Canada and Mexico. That's you can't avoid that. I do think what companies have to be really careful about, and I actually read a piece in a trade paper around comms and public relations about this. There's a perception that a lot of companies took advantage of inflation, and that was a reason to increase prices and decrease the amount of product. And I think consumers are very, very aware of that, and that companies are cautious about their strategy in terms of pricing strategy should tariffs have to be passed down. I think they're very sensitive to that. I think consumers are very sensitive to that narrative. So I think the comm strategy around that, the messaging around that, the perception around that, there's an intangible cost that comes with it. So I think companies are being extra cautious with guidance and then being very measured in terms of how they're communicating this with customers. So I'm curious to see how that plays out as well.
Absolutely. No, good points. Basically Bank of America even came out today saying that the tariffs are a negotiating tactic, negotiating strategy, and that it's hard to really come to grips with what they're actually going to be until they're more than just a negotiating tactic. There's really not very few actual tariffs have been put into place yet.
Right.
And it's hard for a retailer like Walmart or even Amazon for that matter to see what the effects are going to be. So it would be, it's actually very honest for them to say that they're, not sure what's going to come, and that they're certainly not going to be immune to this as things go forward.
Right.
But we do have a couple of big names still to announce, like NVDA, which is announcing earnings tomorrow. But we've had most of our results come out thus far. We've had some clear winners. For example, Netflix has been, kind of a clear winner. Palantir came out with some, positive results, but has given back some ground. What were your thoughts and feelings overall for the trend for this earnings season and for the year-end results of 2024?
Right. So as I had mentioned before, companies have been operating well. We've seen it in top and bottom line results. I think, Mike, and you made a good point before. not only from a geopolitical perspective, from a corporate perspective, are companies trying to discern what that execution on tariffs will look like. There are a lot of other critical areas where the headlines are coming fast and furious, whether you're looking at Ukraine, how hostages are being negotiated, what fiscal policy, digital asset policy is going to look like, our relationship with the EU and Western alliances, any number of these headlines, let's call it 10, 15 years ago, as recent as that, would have been a major mover in the market, just any one of those. And now we're trying to digest those headlines and everyone's input and sudden expertise around them. So it feels more chaotic because you're going from one issue to the next. And they all have domino effects around each other. So it's not like they're just focusing on tariffs, but this also impacts supply chain. It impacts global trade. And I think that's important to note. So I think the market, not that they're giving companies passes, but I think the market understands that companies have operated well thus far, and there is no escaping what's happening on the policy front, and it's understood that forward guidance is going to be challenging to be able to provide that. So I don't think, even if you, Mike, even if you look at, let's look at DeepSeek as an example. I mean, it did not impact the Nasdaq 100, like everyone expected, as goes NVIDIA, as goes the market. It held up well. It reversed itself in under a market session. There is that mentality, almost like a gamification of buying the dip.
Mhm.
So, I think it would be naive, and we said this on our last call, it would be naive to think that um, excellent teams, Qualcomm, NVIDIA, anyone in the Nasdaq 100 names, any S&P 500 name, where you have talented boards and executive management teams where they have not thought about these risk scenarios and have thought about the competitive landscape and understanding any one of these things can happen at any time. So I thought the DeepSeek reaction was an overreaction. Um,
Yep.
and
And
these are all the things that we need to consider.
yeah, and I would agree. I mean, even in the Walmart earnings, which had some negative forecasts, they beat their. I mean, they were a beat. I mean, most of the earnings have been beats. It's just that the forecasts in what's coming forward, nobody has a crystal ball, even though Palantir actually means crystal ball, I think. But their logo is actually a crystal ball. But nobody has a crystal ball and sees how these things are going to affect their businesses going forward. And there's a tremendous amount of uncertainties. So the next one that brings is something that you and I have also been touching upon, really since the pandemic, which is gold. Gold has reached an all-time high, and it has, it's traditionally been a hedge against the U.S. dollar. But President Trump recently called to have Fort Knox audited. I think it's more of a move just to restore faith in, more faith as there was a conspiracy, like one of those conspiracy theories about money not being in the Treasury at Fort Knox. But needless to say, I did look at the Treasury Department's website, which tells you the amount of gold that should be there. Whether or not that's accurate or not, we're going to find out soon enough. But certainly, what are your feelings and thoughts on gold? And then, of course, I'm going to ask you the next logical question on digital gold. But first, let's talk about the physical or numeric variety.
Yeah, well, it's interesting, Mike, because we just had the World Gold Council on the show yesterday. They join us maybe twice a quarter, once a quarter for an update. It's a trade organization that does a fantastic work and advocacy around this and other precious metals. But they, because of macroeconomic dynamics, particularly within the U.S., and the uncertainty around monetary, fiscal, and trade policy, that those implications for gold certainly does bode well as leveraging it for a strategic asset. Inflation can adversely affect U.S. markets. It can help amplify gold's appeal as a safe haven asset. That helps to drive further demand. It was an interesting mention as portfolios are moving from 60-40 to 50-30-20, that they're seeing more gold allocation for that reason. when there's an erosion in confidence in traditional financial markets, gold offers stability, security, liquidity. It reaffirms its role as a key portfolio diversifier. It, again, has exposure to what happens with the Fed. And so again, a more bullish outlook as the WGC is seeing more allocations to investor portfolios for those reasons. I think there's a couple things here too. You had mentioned auditing Fort Knox. I think there's a couple things here to consider. I think it reflects the administration's interest in the renewed call for transparency regarding the nation's gold reserves. I think part of that was motivated by a desire to reassure the public and the markets about the stability of our financial assets. I think part of it was to satisfy this need for transparency. Again, these are all proposals. These are ideas that sometimes I think are thrown against the wall to see what the response is. And again, it's execution and follow through on any one of these. I think even if certain conspiracy theories in the marketplace are out there, whether they're disproved or we move on from it, once that seed is planted, particularly in today's polarized environment and access to information, it makes it really hard to correct that. So I think a lot of it is contingent, confidence is contingent on how things are followed through, how they're executed, and promises being kept. But again, I think highlighting the importance of transparency, not just with Fort Knox, but government institutions in general, could be a healthy reset. So again, it's on execution and how this plays out.
Well, what are your thoughts on the correlation between what is called digital gold, Bitcoin, and gold itself? Because traditionally, at least from what I see in the charts, cryptocurrencies, Bitcoin, Ethereum, tend to trade more with the tech space than as an inverse to the US dollar. That the relationship between gold and the US dollar is very much in play, meaning that gold is usually, if the US dollar weakens, gold strengthens, and vice versa. Whereas, cryptocurrency tends to trade more with the tech sector, more with the Nasdaq. Do you find that that's more? What is your feeling on
Right.
digital gold and cryptocurrency as a hedge for the US dollar?
So it's interesting. The one thing that they do share is scarcity and supply, because they do have a set number of what's available, right? Only so much gold can be mined. Bitcoin's capped at 21 million, right? So they share that factor. But I think it's important to recognize the nuances of the underlying asset. And you are correct. The correlation certainly has been more in line with what's happening, with tech stocks, Nasdaq 100, however you're seeing it. But the store of value, the volatility, the digital nature of Bitcoin is really what sets it apart, and why you're not necessarily seeing it move as a hedge like gold might, relative to what's happening with the volatility in other more risky areas of the market. I think those nuances are really important to understand, because those unique characteristics, the underlying fundamentals, is what makes it different. I wouldn't classify, Bitcoin's its own thing within the digital asset space, and then there's a whole other,
And then there's
side
all
of
the
that.
Ethereum coins and all the other
Right.
cryptocurrencies, Cardano and whatever else. But it makes sense. I mean, because basically, Bitcoin rides on technology, right? That's why
Mhm.
it kind of the ground, the foundation is technology. So it rides with technology, even though it is a store of value. It has all those other similarities to gold, which makes
Yeah.
sense. So great points as always, Jill. Anything else you want to leave us with, or we'll just see each other next time?
I actually have a question for you, Mike, because we've
Sure.
been discussing this with strategists on the show, particularly technical analysts. I know you're getting into the charts in a moment, but high level, what you're seeing, let's call it the S&P 500. Overall, it feels as if it's at an inflection point and it's waiting for some sort of catalyst for breakout one way or the other at a high level. Is that what you're seeing from a technical
Yeah, I
perspective as
mean,
well?
so you, from a technical perspective, when you start to see a market making wide swings from highs to lows, that usually indicates if it's if it's consolidating, then that would indicate that maybe you have further upside. If it's distributing, meaning it's getting wider, making a new high, and then selling off immediately after, which is kind of what we've done. We made a new high as of yesterday, and then we immediately went into kind of selling back down to that low of that range. So it's still too soon to say whether this is a distribution or a pause that can refresh the move up. But again, what I'm going to be looking at when I go through the charts now is where the Magnificent Seven,
Mhm.
where they are in their charts. Because, basically the last time I looked at it, it was, three of the seven were under their major moving averages. And, potentially were, going to go into a downtrend or a sideways trend. But you still have, three that were in an uptrend. Namely, you have Meta, Netflix. They were kind of up, very solidly in uptrends. So,
Yeah.
we kind of have a mixed bag. But again, it is starting to look a little bit more uncertain and going into a sideways pattern, which means that possibly some kind of a correction in the near term. And again, that would make sense fundamentally because you have a ton of uncertainty that there's just no way. I mean, like you had said earlier, we're dealing with six major issues that would have been market moving, but we're dealing with them now. There's almost been a complete reversal of the last 4 years of policy.
Yeah.
I mean that's a
That was a
lot
good
for the
point.
market to digest.
Well, and it could also happen in next 4 years as well. So
I mean,
good stuff
yeah,
to know.
but
Yeah.
that's a lot to digest in like, I mean, look, even if you had a correction, it would be healthy. If we corrected 10% and then went sideways for 3 to 4 months, that would be the healthiest outcome from a technician's perspective.
Yeah.
Because then
Well,
we would be correcting through time rather than continually going up and then being very far from all of our averages.
right. And we have not
Right?
seen that in quite some time, a prolonged
No,
move
we
like
have
that.
not seen. I mean, even if the market went flat for the entire year, that would be very, very healthy. And that's what I'm going to be looking at on the charts. We've been up for 13, almost 14 years
Right.
consistently, and we have not had any significant pause that would refresh the move. And I think a pause or a small correction would be healthy.
Yeah. I think about it. What's today? January 20th. So it's been
It's February 20th. Yeah, but yeah.
February 20th. When was the inauguration? The 20th or 21st? Like we're just hitting
Yeah.
that
What,
1 month
this has
mark.
been 1 month.
Yeah. Yeah.
1 month,
That's
and we've had a reversal on 4 years of policy.
yes.
So that's
That
a ton for the
is
market to digest.
well, good insight for me. And I'm gonna
Yes,
hijack your technical
absolutely.
expertise and use it
No problem.
in my
Let me
stuff.
jump to my charts. All right,
Thank you
Jill,
so
until
much,
next
Mike.
time. Bye
See
bye
ya.
now. All right, perfect. So I got my dash trader up here, and I'm just going to put on the daily chart of the QQQ. So, what I was just saying is that the markets have been kind of up and away consistently. I'm actually going to go to my data config, and I'm just going to go back in time to, let's just say, 2022. So this is the market from 2022. I mean, we're just pretty much at all-time highs. Basically, this is as far as I can go back. We got a couple of years on here, and it is just, up and away. Let's take a look at the SPY. It's pretty much the same story. So, that's a very, very long time for the market to be going up without any significant pause or retracement. Let's take a look at the DIA because really the sell-off today was worse on the Dow. We kind of came up here to the top of the range, couldn't make a new high, sold off, but we've since bounced off the lows. Let's take a look at Netflix, NFLX. It's one of our bullish stocks. So Netflix at an all-time high area, had a big gap up and go after the excellent earnings at the beginning of earnings season. Netflix solidly in an uptrend. So that's one. Meta also solidly in an uptrend. However, they're kind of the one that's taking profit and pulling back. They kind of pulled back hard for the last 3 days, but they're still in an uptrend, potentially even in what would be coming into a buyable pullback. Next, we have Goog, right, which I would say that's probably one of our bearish candidates because we have our crossed over moving averages, prices below the moving averages, and we're actually challenging the last earnings results, after their big gap up. But Goog definitely, Alphabet under pressure. Next, you have MSFT. I mean, Microsoft has been in a complete trading range. If Microsoft is indicative of the market, then we are going sideways to down. So I'm just putting two in the bullish category. I have Meta bull, right? We got Meta as a bull. We have Netflix, NFLX. And then we have, let's take a look at Apple, AAPL, right? Apple is, I'm not going to say it's bullish. It's not bearish. It's kind of sideways, but it's certainly above the moving averages. So I'm going to put an Apple as neutral. So we have Apple neutral. Microsoft, I would say neutral to bearish. Google is bearish, right? Let's take a look at NVDA. NVIDIA is all the way at 140. Really good comeback. Really solid comeback after the deep seek sell-off. So, you got, these major players. Last but not least is Tesla, TSLA, right? TSLA, Tesla. Well, Tesla, I would say, is in the more bearish to neutral, kind of look. So I would say that right now we are overweighted to the bearish to neutral, but just slightly. I mean, it's like 60-40. Now last but not least, we're just going to look at GLD, gold at all-time highs. And of course, we have GBTC, which is the cryptocurrency, Bitcoin, looking like the rest of the tech space, being bearish to neutral. I would say this is more neutral to bearish. So this is a neutral that might be followed by bearishness. But that's something that's very important to note. But I would say that right now the market is more leaning in the direction of bearishness. WMT Walmart, right? So Walmart, I mean, was bullish, but now we kind of broke the uptrend today. So that would be something important to note. So I'm just going to hit stop share. We just did our market analysis that most of the Magnificent Seven are bearish to neutral, but we do have 3 stocks that are solidly in uptrends: Meta, Netflix, being the 2 that were solidly in uptrends. Let's just wrap things up. Stay up to date with all things DAS by signing up to our monthly newsletter and emails. Simply fill out the form at the bottom of our webpage at dastrader.com. Subscribe to our YouTube channel, DAS Trader TV, DAS Newsroom Reminders. Stay up to date on all things DAS via social media, LinkedIn, Twitter, Facebook, and Instagram. Thank you so much for joining me. And until next time, trade well.